Aloha and welcome to Java. Thank you all kindly for joining me this morning. It is June 23rd, 2025. It is Monday after a very full and busy weekend. A lot obviously has happened, not just the bombings in Iran, but also looking at some of the retaliations that are going to happen with the continuance, possibly for the Strait of Hormuz. Why I don't think that's going to be a sticking point. But we're going to look also where they are telling us not to look. Part of this is going to include China and some of what is going on in the East. So, quite a bit to go over this morning. There's just been a tremendous amount. So, let's get started, as always, with what's going on in the markets this morning. Now, our fear greed meter is off a bit, neutral but still towards greed, and I believe that's how it's going to open. We've got a lot of, through all of this volatility, it all dropped stock markets across the board. Pretty much when this event initially occurred, they all dropped. The markets have had time to absorb this, and there is a rapid recovery occurring right now. There is going to be a lot of buy the dip, and this is obviously it's prior to market open. It is a lot of hedge funds and some institutional buying, which is the interesting part. Talk about that in a moment. Now, there are different reasons why he needed to bomb Iran. First, TACO. This is an acronym standing for Trump Always Chickens Out. So he's got a bit of an ego and needed to have a little bit of proof of pivot that he is willing to stand behind what he says. Otherwise, as far as the deals, it would make it much more difficult for him moving forward if he had a loss of this confidence from the external community, if you will. Now, with this, the second reason is the deals going forward. He's still got a large number of trade deals on the table, and if they believe that he's always going to back down, then it won't go well for him as far as his positioning, and he understands this. So, in the larger picture, this could be a small price to pay for the longer term deals that he's looking at doing. Now, the third reason is actually the US dollar. Now, it seems like a bit of contradictory, but what he needs is he's calling for a weaker dollar, but relative to the other currencies, he still needs the dollar to remain strong. So, relative strength of the US dollar, while it's still weakening in the purchasing power, is what he is targeting. Now, the dollar is backed by nothing other than military might. So, what he has just done, and this is going to play through as we see in the markets this morning, is strengthen the US dollar by showing that it is still backed, indeed, by the most powerful military on the planet. So, that was the third, and in my opinion, really one of the larger reasons, aside from the deals, which is also going to play into that. Now, why are the institutions purchasing on this? Well, Dan, I've said the Iran threat is now in the rearview mirror and calling it a positive for the Middle East as well as the tech sector. And it appears that the market retailers and hedge funds are agreeing with him because what we are looking at right now in open is the initial drop on the occurrence has already been recovered, and markets at the moment are relatively flat. We've got the futures also showing that there's a bit more recovery. So we're looking at the volatility index is still relatively high, but really with what just happened, this is nothing. And I'll talk a little bit more about the oil spikes and the uncertainty a little bit as well. We've got gold that has dropped, so it's not showing a run into safe haven. This is much more looking like risk on environment. Now, with this, cryptocurrencies also back up, recovering from a brief drop below the 100,000 level. That probably was the opportunity to buy in here, at least for this period of time. Things are all looking to gain a bit of strength. Now we've got crude oil still up, but only slightly. It's dropped quite a bit. We've got silver had a bit of a squeeze going on. It's up, but only slightly. So with all of these, we're also looking at the 10-year yield. it looks like money is coming out of the bond market, and this is making the yield go up only slightly. Nothing major here. We're watching a little bit come out of that and going into cryptocurrencies, more risk on territory. So this is very interesting. And there's a couple of reasons for this. And one of them is because investors are looking for a way to make money. And the United States stock market is one of the last ways available. So, as I was saying, we've got relative strength of the dollar also increasing. Now, we have BlackRock bought $1.1 billion in Bitcoin last week alone. So, that's an underpinning support the price. So, this just tells you a little bit of what's going on. This company owns the largest number of assets globally. They manage the largest pool of assets. So they're purchasing more. They pretty much know what they're doing. These are the big money pros. Now, a little bit over to gold. Prices dip after this attack as haven buyers are preferring the dollar. So we watched money going into dollar denominated assets, dollar strength, as well as these other moves. Now, let's switch this just for a moment, and I want to go into this a little bit deeper in a moment. Don't look east. We're talking about China and Japan, and you don't notice what they're not talking about. If you look at the news, it's been very quiet on these two fronts. Now, we've had a couple of things happen that they did slightly mention, got buried in the news. The first is about China sending some supplies and having some deals with Tehran. So we'll talk about this in a moment. First, we've got the calendar. We are expecting flash PMI as well as existing home sales this morning. So the calendar is going to play second place to all of these geopolitical events, of course. Tomorrow morning, prior to the market open, we're getting home price index, which I believe will be dropping a bit. Fed president speaking and consumer confidence, and then Fed Chair Powell at 10 a.m. So they'll be looking a bit at that. We've got through this oil. Now, this is what I wanted to speak about a little bit. On this jolting event, the spike that happened with this is lower than the past couple of jolts. Now, we're still waiting for Iran to respond, so it could still go up as well. But I'm seeing the pullback in oil already happening this morning. And in short, what this means is that the markets don't believe this is going to be a long-term risk. Now, for instance, the last time that oil price spiked was on the October 6th attacks, and it spiked, I believe it was about 18% higher than it did this time. So even with bombing Iran, it had less of an effect on the market. Now, a little bit more about oil. They're talking about a possible response being closing the Strait for Hormuz. I don't believe they're going to do that. Now, I just mentioned China, and what would happen is the amount of oil that flows through there, the bulk of it goes to China. So it would hurt China much more than it would hurt the US or even the European surrounding European countries. So for this reason alone, I think that China is in short going to keep a rein on Iran. I'm more concerned about possible sleeper cells in the United States itself or even in the UK. Now, the airline's going to get hit this morning because I've had to close airspace and redirect, cancel a lot of flights, so they're taking a hit this morning. Tesla, very muted after all of this other news, but they did have the robotaxi launch, and it appears it's gone positive. They've got other news with this, which is a look at them. Now, we've also got a rotation happening at this point, beginning to look at gold mines, because with the costs of this, if this oil drops, that would be production cost lowering for gold mine producers. And for the longer term, they could be a possible buy. Now, this is going completely off what I normally speak about, but it's a significant shift in sentiment, as well as one of the more vocal financial analysts that she is generally in charge of the middle middle class, if you will. Suze Orman normally gives financial advice. She is giving an alarm, and what she is speaking about in short with this dangerous economy, she is normally one for bonds. And in short, what she said is rotate out of bonds and go into large cap artificial intelligence. She's suggesting purchasing the Qs or ETFs. I think that may not be the way to go. You've got to diversify, however, not financial advice, but I'm thinking the way to go is commodities, utilities, and then also keeping your own assets, not going all into ETFs. But that is what she is saying. But I think it's interesting that even she, of all people, is talking about getting out of the debt market because it's severely unstable. Now, these are the earnings coming out from corporations this week. Really, kind of FedEx is a good bellwether. And then we're also looking at Micron. So let's look at what else is going on because there's still quite a bit to cover. Now, as I was saying, if they're considering closing the oil choke point, which is the point of Hormuz, as I said, China would be the larger one to hit. Now, China is not doing well economically. We've got the great Martis, this is one, but he brought up a very good point about their economic challenges. $18 trillion, destruction of household wealth. They have very sour consumer sentiment right now. As it says here, their land sale income hitting a decade low. So they've got massive losses here. So, along with all of the economic woes that they are facing, they are very flagging with their economy going down, and they are in the midst of this attempting to start an EU one and take over a little bit more. Now, I'm going to talk a little bit more about some of this in a bit, but they're sending scores of planes across Central Line into Taiwan Strait. So we've got multiple points of escalation going on here, not just in the Middle East. We've also got an aircraft carrier seen operating deeper into the Pacific. There's also reports they are now using DeepSeek to control a lot of the artificial intelligence for their military, for the Navy in particular. And they are pretty much the heads of drones. Now, we've got something else that's a little more interesting because it's a little more out of place. The UK has their Navy flagship sailing off in a quote unquote powerful message of capability. But the interesting part is where it's sailing off to, and it is the Indo Pacific. So we're watching more European assets come into this area. This is the UK in particular. However, I think it has a lot to do with what I'm about to talk about. So the debt, we know the debt market is what we've got to watch and what is about to implode. This is a graph of the top foreign holders of US government debt treasuries. Japan, I've been speaking about them for a long time. We finally got other larger financial voices talking about the threat that they actually pose to the United States through holding these if they need to dump these. Now, by far, they are the number one, but number two is the UK. So if you're wondering why there are so many deals that are struck and why they were treated at the front of the line as far as the trade deals, well, this could be a very good reason. And this is part of what I've been talking about as well. But the surprising part to many would be number three is China. So these are all ways that could be a little bit more manipulation and a little more of a threat than the actual bombing going on. So, with all of this, we've got the Buffett indicator, quote unquote, flashing again. And what this is in short talking about is the crash in the stock market that inevitably followed. And the shift went into gold as well as other commodities. And this is saying get real assets. It's happening again. The rotation out of high growth tech stocks into real stuff like gold is well underway. So the shift into commodities, I think it has only just begun. And gold, while it may have temporary weak point, has got a lot farther to go. So again, back to the dollar. This is graph the loss of purchasing power of United States dollars since 2022. So the longer term graph is even worse, but even since 2022, it's down 46%. So this is, needless to say, significant for those that aren't very good at math. United States added more than 1,000 millionaires every day last year. So this is the frightening part and why we talk about what is going on with the stock market, because most of these were made either in the stock market or cryptocurrencies. We're going to watch reckoning happen. And a lot of these are what we call 401k millionaires. So they're all invested in what they call, these are the pension funds, 401ks, mostly stock market indices, but nothing of real assets, namely anything they hold themselves, that when this implosion happens, this wealth massive transfer will happen in reverse. So we're going to watch this bubble pop. And even if it doesn't, if everyone's a millionaire, then what is it worth? Because your rents and your costs are going to go up accordingly. Now, we've got the Eurozone also having issues, their growth stalling in June. And we also showed a pullback for the United States consumer. So that's a lead indicator for what's about to come, is that things are slowing down. So economically, that's currently where things stand. Very headline driven still. Looks like stock market still green. They're buying the dip, but at the same time, very weak underpinning. And I don't expect it to continue for long. We've got a massive reckoning about to happen. Now, I want to talk about this really quickly. Elon Musk wants Grok artificial intelligence to rewrite the entire corpus of human knowledge. Now, he came out in a tweet saying that there are a lot of flaws, a lot of errors, hasn't been corrected. So he intends to correct all of the knowledge that Grok will be trained on, and that will become what is known as human knowledge. I don't know, something I've heard more frightening in the I don't know how long. So, at any rate, with all of this coming out, I wish you all a wonderful day. I know this has gone on a bit long, but quite a bit to cover. Wish you all a wonderful day, and until I see you again, my friends, resist.